Ladies and gentlemen, we are now ready to move on to another fireside chat of the summit titled Indian Financial Inclusion Story, Crests and Troughs. This is a fireside chat. The session will highlight the achievements of the Indian financial inclusion story and delve upon the future course of action. The issues and challenges encountered while implementing the financial inclusion schemes and policies would also be deliberated upon in this session. The anchor of this fireside chat is Mr. Tamal Bandyopadhyay, Consulting Editor, Business Standard. And in conversation with him is Mr. C.S. Sethi, Chairman, State Bank of India. May I request them both to please join us on stage. Let's welcome them with a very warm round of applause. So, very warm welcome to you both. And I now hand it over to Mr. Tamal Bandyopadhyay to take the session forward.
Thank you, Mr. Sethi, and welcome to this fireside chat. Next half an hour or so, we'll talk about the subject is Indian financial inclusion story, Crests and Troughs. You hadn't been here. I have been here since morning. I think in today's discussion, you have to play the role of this gentleman called Larry Frotonsky. He was a American construction in part of the construction industry. He was, many of you might be knowing, he was Elizabeth Taylor's 8th husband by 9th marriage. Last marriage was that. Because she got married to one person twice. And it was in 1995 May, in their honeymoon in California, in one of those famous ranches on the edge of a forest. So Larry Frotonsky was asking himself that I know what is to be done on a honeymoon, that's Suhag Raat, but my challenge is how do I be different from the other 7 husbands he had? So for you, this is the challenge. How would you be different from all the speakers talking about financial inclusion since morning? You have not heard them. So you run the risk of being repetitive and they will leave the floor themselves. So on a more serious note, Mr. Sethi, you represent India's largest bank, about probably 20-25%, 22% of the banking industry by assets. Globally, only Indian bank among the top 50 when it comes to market cap. Where are you? Some 17th or something? Or 7th? 20, within 20 and all. So tell us, there's discussion not in this line, but I could get a feel that everybody is trying to find out whose responsibility is financial inclusion. Is it the central banks? Is it the government? Or is it the banking industry? Tell me.
Thank you, Tamalda. I think you never cease to surprise the audience and the panelists. I don't know what different way the 8th husband can behave, but I'll try my best. But I think to answer your question, in my view, it's a shared responsibility. It's a collective responsibility. The very defined roles, Government of India, our state governments, set the agenda for financial inclusion, and central bank, our regulators, will ensure the integrity of that agenda, that whether it is actually in tune with the law of the land or banking regulations or banking prudence, so to say. And the institutions like us would actually implement them. So in the sense that all 3 of us have very defined roles, and I'm proud to say that in India, all 3 of us have played a greater role in terms of ensuring that the financial inclusion does happen.
No, why I'm asking this former RBI Governor, Dr. Raghuram Rajan, actually raised the issue, I think, when the PMJDY was being implemented, that what kind of cost you incur. No, if you see the money kept, I'm not going to reel out all the numbers. Everyone knows that about 55 crore accounts now and how much money is. But you see the average money, it's not that much. So it's actually for banks. One of your previous chair Arun Dutti used to talk about one particular number that for every account that the kind of loss that you make. So do you think it's a fair for the banking system, or you think no, this is the responsibility of you? I mean, you have to play that role.
I think the core to the financial inclusion is the affordability of banking financial services. And to make that services affordable, probably all of us in the system are taking certain costs. But we have moved on. I think in the last decade, if you see, currently we have 53 crores Prime Minister Jan Dhan accounts, right? Out of which
54.03 crore
as we speak.
As of 20th November.
20th November.
And the money is 2.37 trillion.
Yeah, which means that I'll tell about our numbers. About 17 crore accounts are with us. And these are all the ones which have started with a zero balance. That is what the primary function of financial inclusion, that you create the accessibility and affordability. Then the costs are there. Initial costs were taken by us. Today, in our system itself, 17 crore accounts carry a balance of 53,000 rupees, 53,000 crores, which means that they're all funded accounts. Then the question of transactional costs come. I think it's in a mix of policy initiative as well as adoption and the regulatory enablers, which had created an environment of low-cost delivery of these financial services. One is the banking business correspondent, which we have largely adopted, and the service is much cheaper than the branch-based service, number one. Number two, fortunately for us, because of the development of digital public infrastructure, the large-scale adoption of digital transactions also is helping us to reduce the cost. Just to give you a pointer, out of this 17 crore Prime Minister Jan Dhan account holders, around 12 crores are direct benefit transfer beneficiaries, DBT beneficiaries. And when we looked at our numbers, they transact 40% of their transactions happen through the UPI. Whether, again, UPI cost is another one, that is for another day, we'll keep it aside. But as far as the financial inclusion is concerned, the way we are administering the banking services, I think it's a low-cost model. And hopefully, as they mature, a lot of these PMJDY accounts have become a full-scale accounts. They migrated to full-scale accounts, which means that the average balance in these accounts are moving up. And these are all CASA balances, which means that they have the potential to increase their savings and contribute to the deposit base.
Thank you, Sir. Khan Sahab, if you don't mind, can you just, once you stand up, sir, and let everybody see you? There's a reason behind it. Please, 1 second. This is Mr. H.R. Khan, former RBI Deputy Governor, and no, you give the clap later. The reason why I asked Khan Sahab to stand up and you are so gracious enough to oblige me, and I would thank Axis and entire authorities to invite him also. We are talking about financial inclusion. You can't discuss financial inclusion without the term called business correspondent, that you rightly said, business correspondent. This is a gentleman who actually introduced his report in 2004. 2004, Mr. Khan, the Khan committee recommended this business correspondent. That's how we got it there. Thank you, Mr. Khan. Now, sir, you tell me, 2004, that is 20 years back. And now, despite all the innovations, despite use of technology, despite so much of investment, despite so much of pride that you take serving thing and all, but still ordinary people are not served well. No? And this is an anecdotal story. Of course, this is many years back when I was a cub reporter, I used to go, and there was a cobbler, and I'm not fabricating this, there was a cobbler sitting at the main entrance of your State Bank of India headquarters on Madam Kama Road. He used to polish people's shoes. And I asked him, "Bhai sahab, aapka paas bank account hai?" बोलते नहीं सर, मैं सबका जूता पॉलिश करता हूँ, बड़ा बड़ा सब बैंकर वो गाड़ी से उतर के मेरे जो पॉलिश करके फिर अंदर जाते हैं। ऐसे क्यों नहीं? बोले मैं अंग्रेजी बोल नहीं पाता हूँ, मुझे तो बहुत डर लगता है। So I think that thing has not yet changed. The same thing, even in Bombay urban. So, sir, business correspondent 20 years back we were happened. Then all this technology change and all. But despite all the innovations, don't you think that still the ordinary people are not well served? There is a scope to improve our service better, or you think that no, I'm making allegations which have no basis?
I don't call it allegation, but I think we have moved a long way from 2004, or maybe I don't know when you met the cobbler. But today, we run a large campaigns to bring the Prime Minister Jan Dhan account today. The saturation levels are so intense. The number of PMJDY accounts opened in the system is coming down, which means that today, everyone much of the adult population have a bank accounts. So the first phase of financial inclusion in terms of accessibility to the basic bank account, in my view, is largely achieved. There could be some exceptions, and I think which gives us potential to further enhance our ability to serve this underserved. But I believe that in terms of providing the basic bank account, we have done phenomenally well when compared to many developed countries in the world. Today, in the US, I'm amazed that even today you see large number of people resorting to what is called payday check discounting. These are the people who do not have an account. 30 to 40% people in the US may not have accounts. Whereas today in India, more than 90% of the adult population have a bank account, basic bank account. I think it's a phenomenal success which we have witnessed, and we have to take pride in it. But having said that, yes, I think the other element of financial inclusion, I would like to again mention, you have not asked, but I still would like to say, because you have provoked me in terms of your cobbler story, the role of the banks and financial institution which has played in this is immense. Today, the second part of, one of the elements of financial inclusion, micro-insurance, I think Mr. Khan committee also had, I think, dwelt upon what business correspondents can do in terms of providing this insurance, micro-insurance, both on the life and non-life. Millions of people are covered under the Prime Minister accidental insurance policy, what we call PMSBY, and life insurance PMJJBY, and even pension, which is again an element of financial inclusion, is picking up through the pension, Atal Pension Yojana. I think we don't have to be defensive about financial inclusion. We only have to find innovative ways of taking those financial inclusion activities to a next level.
What is the next level? Before that, you have a sip of the others getting cold. You wanted to have tea, sir.
Thank you.
What is the next level, you said?
So next level, I think there are two elements which are still, are basically one element, that's credit. When we talked about the basic bank account, I think we have broadly achieved that. Insurance and is moving in a way, broadly we are happy. The coverage can further improve. In fact, the micro-insurance coverage in the country is better than regular insurance penetration. But credit is still a challenge. The microcredit is still a challenge. And the availability of formal credit to the people, your cobbler obviously is one of them, is still a challenge for us, because the formalization of economy had helped many of them to come into the borrowing system. But I think still they resort to the informal ways of borrowing. How do we marry this basic bank account penetration and convert it into microcredit is going to be the challenge. And I think MFIs, the fintech lending, they all are moving in that direction. It's a high-cost model, because there's no low-cost model in credit delivery to the underserved because of the cost of delivering this credit and cost of collecting the amounts. These are not, I think mainstream banks will find it difficult to deliver the credit in a conventional manner. So one is we need to use the collaborations extensively with these players, number one. Number two, that use the digital channels to reach to them for delivery of the credit.
Yeah, Mr. Sethi, you spoke about this business correspondence. That helped a lot and all. And now we have seen the different kind of experiments that India has done, like say local area bank. That was at some point, if I'm not mistaken, 1997, Chidambaram's budget spoke about that and all. And then cut back to this century, we had that Nachiket Kumar committee recommendations, the payments bank and the small finance bank. And then we have, of course, microfinance entities and all. But despite that, if you see, if when this comes to financial inclusion, it's primarily on the banks and that too public sector banks. That's what happened. As you yourself said that the kind of share you have PMJDY, both the numbers and all, every 1/3 is on account of State Bank of India. So how do we change this? How do you get others excited? Do you think we can think of exploring newer, different kind of intermediaries? Or this is the rule of the game, is the public sector banks, that's their responsibility, on their shoulder only the financial inclusion mission, drive, whatever you call it.
While, of course, public sector banks definitely have played a greater role in terms of ensuring financial inclusion, the private participation will happen only when they see value in reaching to the bottom of the pyramid. And that, I think, in some ways they are looking at it. It may not be directly. Today, both public banks as well as private banks are one of the largest funding providers to these microfinancial institutions, are digital lending fintech partnerships, which means that the value of reaching out to the bottom of pyramid is being realized. And that is what I think you don't see direct participation of even the public sector banks in many of these activities, reaching out to the micro lender. So is the case with private lenders. I think all of us are looking at providing the last mile connectivity at a lower cost by ways of whether you call it portfolio purchases, co-lending arrangements, or lending them directly so that they can on-lend to these micro borrowers is definitely happening. I think that can be further strengthened. But in terms of the small finance bank and payment banks definitely have structural issues. They could never scale it up in terms of, while they played some important role in the payments. Payments also, incidentally, is a part of financial inclusion, in my view. So the small finance bank is a good concept. I think that can play a bigger role. But small finance banks also want to become universal banks. I don't know how long the SFB as a format will succeed or survive. The idea is that the last mile connectivity need not be directly engaged by the mainstream banks. I think there are ways of reaching out to the people who are in need.
So collaboration, coordination,
Obviously.
and that joint efforts. Now, last mile connectivity also, technology plays a very critical role, right? I mean, in particularly in the terms of payment space, India is at the forefront. In the globally, you can talk about that. Even many of the developed nations can't imagine of what is happening here. I'm not reeling out the numbers of UPI and all, but all of us know that. So, but the other side of technology that we are facing, all kind of frauds, etc., happening. Now, in State Bank of India, your is a phenomenal success story. I mean, actually explained or proved to the world that even the elephant can dance. So tell us, I mean, have we actually used the full potential of technology, or you see sitting in your perch as the leader of country's largest bank, about 22% of Indian banking industry, where else can technology take us when it comes to banking and financial inclusion?
I think technology definitely has played a central role in terms of the deepening the financial system and also the payment system. What you mentioned, of course, India is rated on the scale of 1 to 5 5 being the most matured payment system. We are in the 5 category, which means that payment system has matured significantly through the digital public infrastructure. How do we use this digital public infrastructure to reach the last mile is the important thing. I think a couple of things what is happening in the technology front is a large number of villages still have connectivity issues. While we have transformed connectivity in a big way, unprecedented way, we still have challenges in the connectivity. And we are experimenting. I think some sandbox experiments are done and some use cases are also brought in on the offline transactions, where without connectivity, how you enable the customer to use do the financial transaction, number one. Number two, I think still, in the rural areas, acquiring infrastructure is still weak. We need to move them towards large-scale adoption of the QR code. China has succeeded in reaching out to billions of people across billions of transactions through, across the spectrum of China is through the QR code. I think this is another element which we need to adopt. And the third thing is that, the business correspondents of the public sector banks traditionally have been a fixed point BCs. We've started as a fixed point BCs, which means that they operate from a particular place. So we are now trying to make them, a lot of business correspondent by the private banks have come in and handheld devices. They have been going around the villages, but they are still mainly providing the payment services. We are now enabling our business correspondent to have a multiple kiosk type. One person will be in the fixed point BC. Another person linked to the same BC will be holding a digital, the handheld device, will deliver not only payments, will deliver 10 other services, including account opening. So which means that, we are taking the bank to the customer and delivering those services in a seamless manner without the person need to come to the business correspondent of a fixed point. So this is very important because many of the rural people, if they even come to the business correspondent, they lose half a day productive day. And our person going and completing the process of account opening. And on our YONO, you mentioned YONO, we are introducing YONO Krushi. We have already introduced in 12 regional languages where the farmer, without coming to the branch, can do the annual review of crop loan with 4 clicks on the YONO. So the immense potential of technology and digitalization to enhance the financial inclusion is, commendable.
But sir, the other side of technology, the scam that's happening, even PMJDY, the other side of PMJDY, all the mule accounts that's been used for, siphoning of money and all. So how do we protect the financial system, particularly the borrowers in that class? How do we save them, protect them?
So this is the other side of the technology, what you mentioned. Yes, I think it brings its own vulnerabilities in the digital space. Especially, in fact, I always wondered the digital financial literacy is important to prevent these vulnerabilities. But I think more and more we see the number of type of frauds which is happening. Probably it is nothing to do with the financial literacy. Among the uneducated or illiterate, even most literate people falling for this scamsters, which means that the digital financial literacy is not only for PMJDY account holders, it is for every account holder who is there in the financial system need to be educated on I think there's a large scale awareness programs which are being conducted both by central bank as well as the banking system. I think we are spending innovative ways of reaching out to our customers. But as far as the mule accounts is concerned, I think both RBI Innovation Hub as well as individual banks are trying to see how do we detect the patterns. Mule accounts do not start as mule accounts. They are, there is a industry of identifying the mule accounts. I am told that there is something called MAS, Mule Accounts as a Service, There are aggregators of mule accounts. So there's so many things happening in the system, which we need to ensure that by technology, by being alert, we have to detect and prevent this mule account, number one. So it's a combination of creating the awareness and fine-tuning our own technological and digital prowess to identify the mule accounts and stop. And more importantly, we are engaged with the law enforcement agencies, Government of India, and cybersecurity agencies of the Government of India, that how a collective effort need to be created to ensure that this menace of mule accounts and digital frauds can be prevented. One small thing I would tell you before I close on this topic, we do a large number of proactive risk management practices, and we use AI tools for PRM. Today, every channel what is available in the bank, whether it is a branch channel, internet bank channel, YONO channel, or ATM channel, every channel is connected to our real-time monitoring of the PRM cell, which means that it's similar to credit card. You try to, if you are using SBI card, you try to use anywhere where you are not regularly using, you get a call. Are you using this card, this place? The similar ability we are developing in the bank, we have already developed, and there's so much on the PRM, prevention of frauds which are handled by the PRM cell is amazing. I think most of the banks are adopting this AI and machine learning models to ensure that the customer protection is taken care of.
Mr. Reddy, tell us, we have come a long way when it comes to financial inclusion, from individuals and households to small businesses, entrepreneurs and all. But, from every forum, you will hear the SMEs and MSMEs that they are not having access to credit. I know you have built a strong MSME business, portfolio and all, but there's much more needs to be done. What are the gaps there, you think? Because we are not, the banking system is not yet equipped to actually have the cash flow based financing. That's the problem, or problem lies somewhere else?
I think for a long time, banks played some greater role in terms of funding the SMEs. But somewhere in between, the delinquencies in the SME sector prompted the banks to withdraw. And much of this SME lending moved to the NBFCs. But today, I think you mentioned about the cash flow based. There are 3-4 elements which are emerging, which I'm confident that the banks will take up SME lending in a big way. One is availability of data and availability of guarantee cover. Today, the CGT MSC cover is increased to 5 crores. We've been asking the government. I'm glad that, for a long time it was 1 crore and it got to 2 crores and it has reached 5 crores now, which means that pretty much the micro and small enterprises are covered. Almost all of them. The typical size is up to 5 crore rupees. So today, with the availability of data points, both in terms of GST, our own account statements, and the bureau data, we are able to analyze and assess the credit requirement of small and micro enterprises. And I'm glad to say that we have developed a business rule engine, which I think many private banks also have had for a long time, NBFCs also have, that in 15 minutes we will be able to tell the customer, what is the amount of loan which is eligible and what is the rate of interest, which is also again based on the robustness of the cash flows. So I think the ability of the lenders to use a reliable data set is going to increase the flow of credit to SMEs. But I think there's a huge gap, unfilled and unfulfilled demand is there from small and micro enterprises. We need to work on how do we scale it up in terms of outreach to the SMEs.
I have many more questions, but the time is it's just showing 3 minutes. So Let me ask you a very contemporary what's happening now, and time permitting we'll move, or otherwise that will be the last question probably. The Reserve Bank of India action on some of the NBFCs, the cease and desist order, because they are charging pretty high. Reserve Bank of India has freed the rates, it's now market driven, but RBI think that they have misused the freedom. But you ask them, they said, look, we have the investors sitting on our heads. We are not here to do philanthropy. I mean, we have to also take care of the investors. They look for their return and all. And you are blaming us. What about banks? Their access to money is far higher than us. Their cost of money is far cheaper than us. But when it comes to the small loans and that kind of loan, banks also charge equally high rates. So I don't know where in lies the truth, who is giving the correct picture. Can you give us a sense? One is that how do you marry this? It's not a philanthropy. We need to give loans, but there has to be rational behind we are charging the interest rate. So what is correct? If you are allowing it, if you don't allow me to be market-driven rates and you think it's usurious, where do I stop? How do we do this? And is there any truth in their allegations or observation that some of the banks also charge as high as the MFIs? Because this is a very critical for the financial inclusion and the people who don't get bank credit, who are otherwise dependent on the informal sources of credit.
No, there should be definitely a balancing act. Obviously, lot of costs are also on account of the collection costs. I think we must understand micro lending has significant collection costs. But it is also a fact that I think the liberalization of the interest rate mechanism by the RBI for MFIs was intended to normalize the rates. Obviously, some of the microfinancial institutions, definitely the rates are much higher than what is expected. As long as, whether it is central bank or the banking player, our focus should be on the taking care of the customer. And customer interest cannot be just overlooked by saying that, I have a business interest to take care. The element which needed to be worked out is that how do we balance the business interest with the customer interest, and the customer interest will enable to protect the economic interests of the lending agency also. Imagine higher rates. What is usurious rates of interest is not defined anywhere. Obviously, we need to be careful in terms of what we are saying about it. But I personally believe that the rates of interest have to be justifiable in terms of the cost of funding, cost of collection, and a reasonable element of profit. And anything about this is not in the interest of the consumer. Thank you.
I am told that we can have little more time. So we are honored, sir, that you agreed to be with us. So let's use that whatever little more time we have there and all. I was going through one of Dr. Reddy's speeches on financial inclusion. He gave internationally many speeches and all. Now, one of the speeches he said, the major issue is not one of inclusion or exclusion, but huge inequalities in terms of inclusion. A low-income person has to pay disproportionately higher fees for any financial service than a high-income person does. This is common to both advanced and emerging economies. What can be done? He has raised the question he did not answer at one of the international conference. Is that talking about the fees? I mean, there is no inequality there. Is there, you think, there need certain things need to be done there?
No, I think it's, ironically, it is more true for advanced economies. Let me tell you. I think most of the underprivileged in the advanced economies end up paying much more than the rich and well-provided there. That gap probably is much less in India. For the simple reason, I'll tell you from my own experience in SBI. Today, SBI is the most highest profit-making company. And we probably is the only institution which does not charge anything for not maintaining the minimum balance. Why am I giving this example is that there is a possibility of marrying providing an affordable banking service, still be a profitable company. So it all depends on how are you structuring your products, how are you structuring your solutions, and what segment of customers you are servicing, and how you are servicing. I think these all will go in terms of providing the affordable banking services. But this is not only true for financial services, it is true for every service which you consume, right? Unless, of course, what we have created in our country, thankfully, is that the affordability of services to any segment of the society, whether it's a medical care or the financial services, still we can get access to those services, in my view, better than many other countries. The quality of services need to be improved, definitely, but the accessibility, I think, is ensured.
So you are saying that in Indian context, it's not the cost of service, the quality of service is still an issue and all, right? Tell us one, again, a very contemporary question is this, financial inclusion and MFIs are integrated. I mean, State Bank of India has been doing a phenomenal job, but that you have been doing all along. In fact, this morning, your colleague said that, Mr. Dave said that financial inclusion in India started in 1969 in bank nationalization. And he said the next stage is the introduction of priority sector lending in 70s. Your colleague said that, sitting there, is that, no, financial inclusion started even before that, when State Bank of India was born, from there. So tell us, I mean, you are sort of taking for granted your role in financial inclusion. But when it comes to microfinance, etc., and they also play a very critical role, but every few years there is some problem or other. It could be external factors like, say, drought or flood, etc. It could be internal factors driven by them, which is collection problem, and that led to suicides, etc. And then the government intervention like 2010 Andhra Pradesh crisis. Or at this point of time, Reserve Bank of India said that these are all push loans. They actually don't, it's not driven by demand for loans. You are actually pushing down their throat all the loans, etc., etc. And then on top of that, you have periodically the loan waiver programs, by various governments, state governments. As we speak, I think Telangana just completed yet another loan program. So all these external factors and internal factors, in some cases, as far as MFI is concerned, they are the silent killer of the credit culture. If I see that others are getting away without paying, even if I am capable of paying back, I will not pay your loan. I'm sure you must be also facing the same thing. So being the lender, being the India's largest lender, and you are heading that, tell me what is to be done on how do you address that credit culture?
So I think from a lending perspective, I'm not getting into the loan waiver at this juncture. But if you restrict only to the microfinancial institution or micro lending, whichever is the institution which is doing micro lending, I think philosophically we need to remember that if there is a poor man and if we are not enabling him to do better by lending credit and he defaults, he was poor earlier, but we made him poor and defaulted too. I think this is where the central bank was worried that, growth at any cost by lending agencies is not acceptable. And if you are only pursuing that, I remember now, it sounds ironical to us that the regulator has to stipulate you cannot give more than 4 loans to a household. It demonstrates, what is happening on the ground. So it is responsibility and the governance among the microfinancial institutions or micro lenders in general, that what is our target group and how well we actually help them to come out of or provide the livelihood, if it is meant to be livelihood. And a bit of that anyway definitely will go to the consumption. But it is a collective responsibility to ensure that we have no right to make them not only poor, but also poor and a defaulter. I think which means that our governance mechanism, both in terms of assessment of credit, making the credit available, collection mechanism, and the interest rates, all of them have to be taken care of to create an ecosystem where a healthy ecosystem is created for the micro lending.
So that's about the lenders. But say when the state government, upper state government announces the loan waiver programs, how do you, as a banker, how do you manage the credit culture in those areas?
So I think there is nothing much lenders can do on the
It's very
culture.
difficult for you to.
It is a difficult situation to handle, but that is for the political system and the policymakers to decide how to handle that. I think the broader is only loan waivers is a subsegment of whatever customer behavior is. But the customer behavior also impacted by the push which the central bank is definitely worried about.
One more question, then if anybody from the audience want to ask any question, Ramesh told me he has a question, I'll be that. But tell me, we looked at the different aspects of the entire thing. But if I ask you, giving loan to that segment of the society, reaching out to them, going beyond metros and cities, going to the hinterland and all. There are a system, there are processes, there are intermediation, all those things are there. But at the end of the day, is it a challenge or is it an opportunity? Because I get confused. There are some people say there are some bankers say it's a challenge. I mean, but they have the grit to face that challenge. There are others who will be very happy if they don't need to do that. But there are other bankers also say, no, it's a great opportunity. I mean, we can actually make money. It's not philanthropy. It's not doing anything like that. So through your prism, you are a career banker, I think 37 years, 36, and you have risen from the ranks, so you have seen every aspect of banking. And today you are in Bombay, but you had been to many other places and all, and you have handled so many portfolios of right from credit to liabilities to everything. So financial inclusion is a challenge, or actually it's an opportunity for you from the balance sheet perspective?
No, I think it's a Tamalda, it's a no-brainer. It's an opportunity, definitely. But it becomes a challenge when that opportunity is not properly utilized. And I think many a time we get into this debate whether it's an opportunity or challenge because we are not looking at ways of handling this opportunity. I remember, since you mentioned about 36 years of career, just give an example. It's not all about financial inclusion. Any banking opportunity, I think many a time we fail to see that when it is available. But when it is available, we need to grab that. I remember a decade ago, this is my favorite anecdote, I can't resist saying this. Mrs. Bhattacharya is our chairman, and we wanted to become housing loan providers. And all of us were told that irrespective of your rank, whether you are an attender or chairman, every one of you have to get one housing loan customer. And you will be called Grahatara. You will be given a badge and you wear on your shirt, Grahatara. Every one of us have gone to the market, got a housing loan. And till that time, we were seen to be a large corporate banker who were writing 1,000 crores check, 10,000 crores check, but never bothered about the small value housing loan customer. Today, I'm proud to say that we have 8 lakh crore housing loan portfolio, the largest in the country. And we have serviced lakhs of customers to get their first home in their life. 99% of our borrowers are first-time home buyers, which means that this is nothing but inclusion, what we have done. And the same opportunity is available in the financial inclusion space. I think we only have to get it right, and there will be noise. Noise is justified in many cases. How do we create this narrative of helping the poor in a meaningful way? I think it's all responsibility of the policymakers, central bankers, and the lenders and bankers, microfinancial institutions who are largely present here. I think it is our collective responsibility and collective opportunity, which we should not allow to go waste.
What would be in percentage term of your balance sheet, what would be, corporate is about 45% now? 40. And out of the 60, loosely, I mean, how much would be in percentage term you think, I mean, which you can classify as this particular size is actually you have done, and in the process you have taken forward financial inclusion?
So, in terms of liability side, in terms of number of customers, I think nobody can match our size. I think more than 1/3 of our portfolio is essentially financial inclusion customers.
Yeah.
On the asset side, if I really take only the micro lending,
Yes.
we have about 1.8 million SME customers, MSME customers, out of which 95% are micro customers. Mm-hmm. Which means this is the role which we play directly by lending to the micro customers. But we do a large amount of NBFC lending and MFI lending. 23% of our portfolio is actually NBFC lending in the corporate book. And most of these NBFCs are also our micro lenders. So in the ecosystem, SBI plays a greater role in the financial inclusion on the credit side also.
Obviously, I think Axis has recognized that SBI has become, I think there's an award for financial inclusion for State Bank of India. We'll hear that later, but this gentleman I wanted to ask a question. Ramesh, I think. Can he have a microphone? Is there any microphone? Can it be given? Anybody else has a question? Give and raise. Next is Khan Saab.
Thank you.
You don't mind, right? You don't mind, sir? I did not ask you. Sorry. I said I did not ask you. Opening the floor is okay, no?
Okay.
No, but I have a choice of not answering the question.
Okay, absolutely.
Absolutely. There's no controversial questions.
Please.
Sir, through the day, we've talked about, Tamalda said it very nicely. He talked about marriages and wives and husbands and wives and how you're going to be different. So one question I want to ask you. We are increasing the space of digitization, and digitization is very good, is excellent. We love it. It's transparent. It makes us accountable. It opens up the surface area also for attacks, not in terms of frauds. Frauds are something that you can deal with awareness, but there are certain systemic issues that are happening on the technology front. So how as a bank are you looking at it? For example, I'll tell you, the quantum chip has been unveiled last week in the United States. And it's getting, and quantum computers are going to be real. So your method of encryption in the payment system, which uses 3 methods called RSA, ECC and AES, can all be decrypted. That severely compromises the existing payment system technology.
Thank you, Ramesh. Sorry, just can the mic be given to Mr. Khan, and that will be the last question. Sorry, I thought we'd take more questions, but the time would not permit. Sir, up to you. Please, first you want to answer that? Seti sir, you want to answer his question?
Yeah. I think the debate about quantum computing, in fact, I was told that quantum computing even can break the blockchain. So we have our cup full of problems now, and I think one more new problem to handle. But just to tell you, as the largest bank in the country, what we are looking quantum computing as an opportunity and as a threat, if it is a threat. But we need to understand what is the implication of this quantum technology which is going to come. So we have an incubation center in IIT Mumbai, which is, we have funded that in a big way. And one of the use case or one of the problem statement what we have given to them is, what is the emerging nature of this quantum computing and how it is going to impact banking technology, including the payment space, what you mentioned. So I think we are mindful of, we are aware of this. I don't know, I can't at this juncture call threat, but I think the emerging risks of quantum computing are familiar to us, and we are working on that.
Thank you, Seti Sahib. Now, Befittingly, last question from ex-central bank Khan Saab. And you have already heard that the business correspondent model actually, because of, his report recommended that and Reserve Bank
Thank
of
you.
India followed that. Khan Saab, yours.
That was 2005. No, so the point is, no, I must compliment Mr. Sethi for very nicely handling the tough questions thrown by.
No, you can't handle Tamaldar, let me tell you. You only have to go with the flow.
Sir, your question.
So no, since morning we are hearing a lot about Jandhan account, 54 crore account, and other. One product which has been talked about ad nauseum is overdraft. I don't see anything happening on that front. And now that we have a lot of information coming, AI being used, you can see how end use he is making and all that. Is there any scope of seeing that this overdraft thing? Why I'm repeatedly asking about this overdraft? The people transit from formal to informal, informal to formal. When they transit in that period, their interested obligation goes up like anything. Even for KCC, to make it credit, they have to borrow from informal sector. I think this is a known fact, and some of them call it is evergreening in evergreen revolution. That's a different subject. But so if you provide that overdraft, this issue of getting back into the informal and coming back to the formal will be handled, provided you have the data which we have. That is, and related question, this is on the asset side. And similarly on the Jandhan side, we have seen a lot of innovations in credit offerings, but not many in terms of deposit offerings for the rural sector. I only heard about Lakpati Didi, you mentioned. But what is there in the rural sector, are you thinking? Is there any product which is suitable in the rural sector, particularly women in the rural sector, which will, because as you said, technology brings that advantage of in small sachets of savings to be pulled. So is there any thought on that? Thank you.
Thank you,
No,
Khan Saab.
absolutely, sir. I think very valid points you've raised in terms of, I think we have been talking about overdraft almost for a decade, but that did not materialize. I think most of us not averse to giving the overdraft. I think it's 10,000 rupees, something what we have thought about. And we also have said that based on, just put a flag, yes, is eligible for 10,000 overdraft, and just take a digital consent and then you give the amount. The issue is not about the lending part, it's issue about the collection part. How do we collect this 10,000 rupees? And we looked at, whether it is possible to link to the DBT. If suppose historically the DBT is coming into the account, and that amount can be recovered from the DBT credits. But what we saw that the ease of giving this 10,000 rupees and the amount, if you give a repayment schedule, you can't collect that money in a defined repayment schedule, which means that we need to have different ways of recovering that. Whenever the money comes, we need to recover small amount, and then the part of the DBT has to be given to them. So my view, sir, there are other competing products which have also come, which have not made this overdraft competitive enough. One is the microfinancial institution lending itself has picked up very well, and a JLG can get 1 lakh rupees loan. So 10,000 rupees is not really attractive to many of these Prime Minister Jandhan accounts holders. The second thing is that a meaningful scheme, in my view, which has come is the PM Swanidhi, which is a profession-based, activity-based lending, is also a small value loan. We started with 10,000 rupees. We are into third tranche of giving PM Swanidhi. And I personally believe that these competing products also made the 10,000 overdraft which is given to Jandhan accounts unattractive. So I think these are a few points. Maybe there could be several other reasons why it is not picking up. We will definitely work on it. And on the liability side, I always say that the original SIP is recurring deposit. And this recurring deposit culture is something what we have to encourage. But still, I was just listening to Ashish Chauhan of NSE. that every nook and corner of this country now people are interested in investing in SIP or in the equity market. So how do we marry our, a simple deposit product, and you say that, the interest portion, if whichever SIP they choose, it go to them, which means that you are combining the savings as well as investment, which is again a financial inclusion objective. So this is something which we will be launching in this current financial year, combining the fixed deposit and SIP in a small value. It's just 1 lakh rupee deposit or 50,000 rupees deposit. Sachetization of SIPs are going to launch in January. We want to combine this product and ensure that this is made available to the rural areas.
Thank you, Mr. Khan. Thank you, Ramesh. Thank you, Sethi Saab. I'm not going to summarize it and waste your time. I think whatever you needed to speak, you have spoken. And if you have enjoyed that, give him a big hand. Thank you, sir.
Thank you, sirs. May I request you to please stay back? It's been a very enjoyable session. I'm sure you all enjoyed being part of that discussion. It was a fireside chat. May I now take the pleasure of inviting Mr. Vipin Sharma, CEO, Axis Development Services, to please join us on stage to kindly present a memento to our esteemed panelist and the anchor of this fireside chat. We thank Shri C.S. Sethi, Chairman, State Bank of India. Thank you, sir. It's been an absolute pleasure to have you here with us.
Thank you so very much. Someone like you don't talk. I know, but here was a very, very intelligent conversation. Thank you. Thank you very much.
And of course, our heartfelt thanks to
Thank you, Tamal, as always.
Mr. Tamal Bandyopadhyay.
Very insightful, very intelligent, and so much. Thank you. One touch to come closer.
Thank you, Mr. Sharma, for joining us on stage to do the honors.